Hello everyone, this is Muhammad from StarseedFX. In this video, I will show you how to identify smaller ABCDs hiding within larger ones. Plus, I will explain how you can capitalize on these patterns by trading them from higher time frames. It's a straightforward approach boosting your trading success. So let's start. We are on Euro Canadian 4-hour time frame. We had a bullish trend and then change of character from bullish to bearish, and then break of structure, did not last for long, and then a change of character. So here we have a confirmed bullish trend, and this is our working trend for today. Once I have a change of character, I will start looking for A, B, C, D so I can mark my discount zone for buying opportunities. If you remember from the last video, for buy, we want to buy from discount zone. For sell, we want to sell from premium zone. And let's go quickly over how to find ABCD. It was explained in details in the previous video. If you haven't watched it, you will find the link in the description below. But anyway, a quick reminder will always be good. For A, I want to identify the latest bearish candle, and that latest bearish candle to be broken by candle body, and that will confirm A. Now I have this bearish candle over here. Let's enlarge the chart. This is our latest bearish candle broken by candle body. So I have A. Great. For B, I want the low of the highest bullish candle to be broken by candle body or candle wick. Now this candle is my highest bullish candle. I don't know if I will have another one or it will remain as the highest one and the market will break its low. So the market pushing up and I have a new candle. I will keep waiting for its low to be broken. So I will follow the market trend. And now I have this bullish candle to be the highest. I have a higher one over here. Its low is broken by candle body and candle wick. It's a good confirmation for B. Now I will be waiting for C. For C, I want the high of B candle here to be broken by candle body. So now how to identify a smaller ABCD pattern within the large one or within the big one? As you can see here, the AB leg is too big and we don't know how far the market will retrace down until it starts going up again, breaking B to confirm C. And of course, the market will not be moving straight forward like this, right? The market will be moving like this. Maybe even like this, and then up again until breaking B to confirm C. So we want to take an advantage of that movement here. So by eyes here, we can see A, B, C, D, use Fibonacci between A and B, C and D, whatever you like. The market drop in the discount zone below 50%. Place your pending buy at 50% or 61 or 78. You want to trade it from lower time frame, it's up to you. You want to trade it from higher time frame, it is up to you. But it's very important to spot the right ABCD within the big ABCD, right? The rules of ABCD will remain the same. We are going to follow the same rules of ABCD, okay? So let's delete these lines here and start thinking of how to find an ABCD in here in this zone, right? So first, again, to identify A, I want to recognize the latest bearish candle and I want its high to be broken by candle body. It's exactly the same rules of ABCD that we did explain many times. Now I have a new bearish candle because anyway, I will be sitting down in front of the market or checking the market every 4 hours if you are on the 4-hour time frames, or every hour if you are on H1 time frame, right? So we will see the ABCDs film. It's right in front of our eyes. We want to get advantages of it. We want to take an advantage of every single movement of the market. We don't want to just be sitting down and waiting for B to be broken while there is a lot of money over here that we can make. Let's find our latest bearish candle and see how the market will move. Now I have a new bearish candle, and this is not a new one. I'll move the market, moving the market over here, down there. Okay, now I prefer to mark this candle, yes, here, as the lowest bearish candle. Some other traders would say this candle here is the lowest bearish candle. Why? Because it's lower by candle body than the previous one over here, or this bearish candle over here. I don't mind that. I'm not against, okay? But I just don't prefer to mark it as the lowest bearish candle. I like my lowest bearish candle to be a clear candle like this one, not disturbed by any candle wicks. So if you will consider this bearish candle to be your lowest bearish candle, it's not a problem. If you will follow and think this candle here is your lowest bearish candle, it's also an okay. I'm not saying the one who will consider this bearish candle to be the latest one is wrong. I'm not saying that. Just how you see the market, and it's your trading style, because the concept here will not be different of marking ABCD. Okay, so now either this candle here or this candle here needs to be broken by candle body. But for my example today, I'm using this candle to be my latest bearish candle. So I will mark the high here, and I want it to be broken by candle body. Okay, now my latest bearish candle, its high is broken by candle body, and that confirms A. I will place A at the latest wick, because this is where I'm going to start using my Fibonacci. I'm not going to use my Fibonacci from here. I will use my Fibonacci in here. All this week are liquidity sweepers, right? So clean all the liquidity around that zone. So I will start using my Fibonacci from here. So I will just mark it as A. Now for B, I want the low of the highest bullish candle to be broken by candle body or candle wick. Let's move a little bit quick. We are not having, okay, now it is broken by candle wick. So I have B confirmed. Now for C, I want B to be broken by candle body. I will mark it here, but of course you know that this wick over here also should be broken by candle body. Okay, now what we see here, A is broken by candle body, and I'm not having C yet. So that structure or that setup is failed, and I will start over to find ABCD. Okay, so now I have this bearish candle to be my latest bearish candle, and I'm doing this, by the way, I'm not having a change of character over here, correct? This A point over here is a potential change of character, right? So if the market pushed down and confirmed a change of character, I will stop looking for buy and I will start looking for sell all from the beginning. Is that clear? So from A to B or from B to A, it's the area or the zone where I'm looking for internal ABCD. If A is broken by candle body that confirm a change of character, then I will stop finding a small structure of ABCD. Okay, so I'm still looking for my latest bearish candle. Apparently this one right now, I would point it as the latest bearish candle, but just waiting for its high to be broken by candle body. Okay, now the high is broken by candle body, as you can see. So I have A, B, I'm waiting for the low of the highest bullish candle to be broken. Now I have a new high bullish candle over here and it is broken. So this candle over here is B. For C, I want the high of B to be broken by candle body. Okay. Now, to be more specific here, I have B broken by candle body and I have C confirmed. Okay. So you see, A, B, and C is not confirmed because I'm waiting for B here to be broken. And while I'm waiting for B to be broken, I have got an A, B, C pattern. Now I can use Fibonacci to mark between A and the highest point of the trend, or C and the highest point of the trend over here. Looking for my discount zone below the 50%, you can place your pending buy at 50%, 61.8 or 78.6. That if you will trade it from the high time frame. If you want to apply it from the lower time frame, it's still the same thing. You're gonna mark your zone over here. When the market drop inside your zone, you will go to the lower time frame, try to find another ABCD pattern or ABC pattern, and then place your pending buy. Okay, so now let's see how the market will move. We are focusing more about finding the ABCD. How to trade the ABCD? We covered that topic in the previous video. Now we are finding the small structure of ABCD or the small pattern of ABCD within the big pattern of ABCD. So now let's look how the market is moving. Sorry, that's supposed to be red. I have A confirmed and have B confirmed, but I don't have C confirmed yet because I don't have B broken. At the same time, I have A, B, C, and I'm not worried too much about D, right? And this here is a trading opportunity, right? So I don't want to keep just waiting, looking at the market, neglecting what's going on around. I can take advantage of every single movement of the market, every single pullback, right? And that is how we can make money along the way. Let's move the chart and see if the market will drop to our discount zone over here. Great. The market dropped to our, or retraced to our discount zone where we can trade the market. If your pending buy was at 50% or 61.8, it was triggered. If we are going to trade it from lower time frame, at the lower time frame looking for ABC pattern. But let's see how the market will react from this zone. Well, in fact, the market go up and now your take profit target is minus 27 or 0%. If it was 0%, your take profit target was reached. And if it is minus 27, your take profit target was reached. So now, after finishing the ABC pattern inside the big ABC, look what happened here. B is broken and I have C confirm. A, B, C. Now, you see what happened? While I'm waiting for my big structure of A, B, C to be confirmed, I had the opportunity here inside the AB leg to trade A, B, C. Was here, the market retraced to the discount zone, and I could make money while I'm waiting for the market. Okay. Now, if you want to continue trading the smaller structure and keep continue on the market, is up to you. But now you have two chances of the market. You have the big A, B, C, and you have a small A, B, C, D. Let's continue on the smaller ABCD because I want to talk about something regarding the ABCD and the continuation of ABCD. If we look at this candle over here, this bullish candle, we can see its low is broken, but only by candle wick. And the high here is broken by candle body. It's just a small part of the body, and I have a breakout. Having a breakout like this, I can again use Fibonacci from here to the highest point of the market, get my discount zone, wait for the market to drop, and place a pending buy at 50% or 61 or 78. Let's see the market, how the market will do. Along the way, right here, I see this candle over here. Let's enlarge the market more or the chart more. You see this candle over here. This candle is the highest bullish candle, and its low is broken by candle body, and that confirms D. And that confirms D for what? For my smaller structure. Is that clear? It confirms D for my smaller structure. D in here is not only confirming D for the small structure, but also confirming D for the bigger structure. Why? Because the market or the big structure having C confirmed here, correct, by breaking B, C was confirmed and the market pushed up, creating this candle over here, that bullish candle, market as the highest bullish candle of the trend, and its low is broken by the body of this bearish candle, and that confirms D. So now I have a complete A, B, C, D for the big structure of ABCD. And also I have A, B, C, D for the small structure of A, B, C, D. You see, ABCD is everywhere on the trend. It's everywhere on the chart. With more practice, you can spot as many of ABCD patterns. Now we have many choices. Do you want to trade that breakout today? You can go ahead. And then you want to back it. If it didn't work, you want to back it up between C and D, go ahead. If you want to back it up, if it didn't work and you want to back it up by A to D of the smaller structure, it's an okay. If you want to use between C of the big structure and D, which is exactly the same zone between A of the small structure and D, so you see, you have a kind of a lot of opportunities, and also have between A and B. How many trading opportunity do you have just by following A, B, C, D pattern from the big picture or the big structure to the small structure? Let's see where the market will go, because we have one setup here after the breakout, the second setup from C to D, the third setup from the big structure of C to D. So this is the third, and from A to D, we have 4 setups. I'm not asking you to place 4 pending buy, right? But I'm just trying to show you how many chances in the market that you can trade, okay? Anyway, let's move the market and see what will happen. Okay. Where do you think the market retrace? Look, the market retraced in this zone between here, the breakout, and D, right? In here, touching the 61. And also the market between 61, and also the market between C and D, touching the 50%. You see? So from the breakout, let's clean all Fibonacci over here and redraw from the beginning and see how amazing that was. Now the market from D did retrace in that zone. And we said we have 4 market chances, correct? Let's use Fibonacci from the breakout to D. Reach 61%. And then use Fibonacci from C of the smallest structure to D. It's reaching its 50%. You see here, the 50% of C to D is the 61% from the breakout to D. And of course, from A to D, or C of the big structure to D was not reached, or A to D was not reached. So the market was moving strong bullish. That's how the market is respecting our ABCD. How someone can trade the breakout to D and another one can trade C to D, and both can make a winning trades. One more thing that I would like to share with you regarding the ABCD on the continuation. First, I'm looking for the complete pattern of A, B, C, D. Okay. Let's say the market is strong and will move like this. Pull back, up, pull back, up, pull back, up. Okay. Now I have A and B, C, and D. Okay. For the continuation like this, if the market keep pull back and make a break of structure, pull back, break of structure, pull back and break of structure, to make easy to myself, I wouldn't keep marking A, B, C, D, and I have a lot of marks over here. As long as I see this is a market continuation, so I will mark this pullback over here or higher low over here as a C, and this higher high to be as D, and same and so on. So higher low is C, higher high to be D, higher low C, higher high D, and higher low again C, and so on until the market change character. Okay, so A, B, C, D, C, D, C, D. Why I'm doing like this? Because in fact, here, this C will become A for this pattern over here, right? Look, if I move A here below A, and then B above D, and then AB, and this becomes C, and here become D, right? And then I want to do another ABCD. C will become my A, so I have to make another B, and D will become my B. So if I already know that's the scenario, I don't have to keep doing this. I will keep moving on C, D, C, D. If that makes sense to you, you can use this as an advantage for you to make your chart clear to your eyes. I myself use it and I find it good because I have already marked the most important part of this pattern is to get your first A, B, C, D. All the pullbacks after, you never know, it will be 1, 2, 3, 4 pullbacks, 5 pullbacks, as long as it's respecting the levels of the market and does not break stay here, which means I will not have a change of character, because here, stay here was a potential change of character, right? And then the market keep pushing up. Now I move my potential change of character here. And then I have a new higher low and I move my potential change of character over here. And then I have new higher low and I move my change of character over here until it's changed. So I have a change of character here. So from now I cannot say CD, right? No, I have to look for A. Sorry, let's do like this. So now I have to look for A, B, C, D. Okay, and A, B, C, D. If I got my A, B, C, D, my new A, B, C, D for the bearish, right? I can continue the market like this. C, D, C, D, C, D, and so on until C is broken. That means I have change of character. So this is something that I wanted to share with you. It's just a little trick that I'm using to keep my chart clear. If you like it, you go ahead, use it. If you feel it confuses you and you want to mark A, B, C, D with every single step or every single setup that you are marking, it's your choice. Thank you so much for trading videos. If you want to connect with the fellow traders and dive deeper into ABCD structure, join our community today and let's grow together. You can find the link in the description. Safe trade, everyone. Thank you for watching.